The CPI report from last week on August 12th said that inflation was purportedly cooling, down from 3.5% to 3.4%. Sounds good, right? Well, I'm an anesthesiologist, and when I have a patient who has a fever that's dropping by 1/10 of a point, but still has a white blood cell count that's continuing to climb, I don't call that patient stable. I do more tests to get to the bottom of it. And that's exactly what is happening with this economy right now. And by the end of this video, I'm going to give you the 3 vital signs that you can monitor to accurately diagnose this patient instead of following the headlines. So for those of you that don't know, diesel is not just the extremely high number that you're seeing at the gas station from day to day. It bleeds over into absolutely everything in terms of transport. A prime example is farmers currently are paying about 2/3 more in terms of diesel costs than they did last year, which extrapolates out to approximately $1.4 billion in extra diesel costs. And that's not even including fertilizer. Fertilizer, from the latest data that I've seen, is almost up to $200 per ton. So all of these extra costs are filtering down from the increased cost of diesel. And this isn't just about agriculture, okay? It bleeds over into everything. It's the truck that hauls your groceries. It's the truck that delivers your prescription medication. And it's the freight that delivers everything from lumber to medical supplies. And this isn't just about a one-time cost. When you see this elevated in the CPI, it bleeds over into the next 2 to 3 months. So this cooling CPI report, all it is really denoting an infection that's continuing to spread. Now, as the infection continues to spread, this is something that most people are missing. When these diesel prices spike, it's not a shock that's just going to filter out and fade away, especially now with Ukrainian drone strikes taking approximately 20% of Russian refining capacity offline, and some reports even say more than that. And in addition, we have Middle Eastern refineries where an enormous amount of refining capacity has been taken offline, in addition to the main transit for these refined products through the Strait of Hormuz essentially being closed over the past 4 months or so. And for those of you that don't know, the refinery is the machinery, the factory that's responsible for turning crude into diesel, as well as other refined products. So when all of these refineries are taken offline, this is an infrastructure that can be just replaced in a couple of weeks. This is a structural bottleneck that is going to last for months and maybe even quarters to come. Now, this is the extremely important part for investors. Just like in medicine, when something essential is taken offline or their supply chains are cut, then the intermediaries that still have supply, they gain pricing power. And it's the same in energy markets. And just look at the diesel crack spread. It's over $100 a barrel now. And basically what that means is that's the profit for turning crude into diesel or other refined products. In this case, it's over $100 a barrel, which has set an all-time record. And this is the Goldilocks scenario for refiners that are still online. You have your input costs, crude, are low, and then your output, your refined products, your diesel, is at all-time highs, meaning that your profits are continuing to climb and climb. And like we said earlier, a lot of these refineries have been taken offline. That causes a supply crunch, and that is much more structural in terms of their continuing to have profits down the line. And as investors, when we ask the question of the probability of continuing profits in certain companies, this brings me to the pure play refiners. And what I mean by that is Phillips 66, Valero, and Marathon. Now, these refiners have done extremely well over the past year. And I'm not saying go out and buy all of these refiners. But what I am saying is I want you to understand the transmission mechanism. Remember, we talked about all of these refineries in Russia and the Middle East being taken offline. In addition, I don't see any increased transit numbers through the Strait of Hormuz. And then in addition, there have been more and more attacks on ships going through the Strait of Hormuz, which to me tells me that the increased tightness of this market is going to continue and should hopefully be reflected in these increased share prices. Now, as investors, the question we should be asking isn't, is diesel high? But what are the factors that are going to make this structural and increase the probability that these profits in these certain refining companies will continue down the road. And again, it's on you to do your own research, do your own due diligence. This is just what I am choosing to do with my own portfolio. Now, portfolios aside, this is where it gets genuinely concerning. For the month of July, we saw a loss, not just a slowdown, but an actual loss of 23,000 jobs. Now, to add insult to injury, for the months of May and June, we saw revisions down of over 100,000 jobs, meaning over the last 3 months, we've actually had almost 125,000, a little probably north of that, of job losses. And I want you to think of the job market here as the body's immune response. It is responsible for having resilient consumers that are able to go out into the economy and spend in an economy that is 70% consumption. Now, if you have an immune response that isn't able to spend, then they aren't resilient. In addition to having increased input costs, then all of a sudden you don't just have a slight fever. You have something that's much harder to diagnose and treat, because the normal treatment here would be to raise rates to fight inflation. But if you do that with already increased energy costs and a weak consumer, then you could cause a complete breakdown of bodily function. So how can we put our diagnostic spin on the decreased bodily function that we may be seeing from this infection that's currently spreading? I want you to see that the market is pricing in a cooling inflation story, whereas I am seeing increased energy prices, increased diesel, that is going to bleed over into increased food, increased transport, and increased fertilizer costs. That's going to hit a consumer that the job is in a job market that's losing jobs, thousands of jobs month over month. And now this isn't a inflation is cooling story. This is a story, in my view, of a market that is fundamentally misdiagnosing inflation for disinflation due to increased energy costs that will strip demand on a longer time horizon. This reminds me of when I first stepped foot into the OR, and when a patient's heart rate jumped to the 120s, I thought it was just because of pain, so I treated with increased pain meds. But it actually turned out that there was internal bleeding that was causing the volume to go down, and then it was a compensatory response. And I try to evaluate the markets the same way, because just because you think of one cause, you have to have an open mind. And as sound investors, we have to not be myopic vision, and we have to think about all the different data points and how that can formulate our thesis moving forward. And with that, I want to remind you not to just watch the core headline CPI number once a month. I want to leave you with a 3 vital sign framework that you can use to actually get a grasp of what's going on. So remember the headline and core CPI to look at the difference between the two. And then we have diesel prices. I want you to use that as your leading indicator, because that will bleed over into agriculture, food, transport, and diesel prices at the pump. And then also we are going to watch non-farm payrolls to see how the immune system is holding up. And if the revisions increase and we increasingly hemorrhage jobs, then I would be very, very cognizant of that and watch that when you're evaluating the markets. And with that, guys, thank you so much for tuning in to another episode of Medicine to Macro. As always, movement is medicine. And the more that you stay curious, ask questions, that will bleed over not only into the markets, but into life itself. Thank you so much for tuning in. Please consider subscribing if you got value out of this diagnostic framework, and I'll see you on the next video. Cheers.